The bulls made a huge save on the market last week, and the dollar continues to break down. Lots of stuff that we need to talk about. I'm Patrick Ceresna, and I do these live stream updates every single day, Monday through Thursday at 9:30. If you're loving this, make sure you make us in a part of your daily routine. So let's dive into this and see what's going on. So we walked, the market walked right to the edge of the cliff. We talked about the 6,800 level being critical because the biggest danger to the market was when systematic traders are being forced to sell. And they create an imbalance of order flow that causes those air pockets and deep market corrections to actually happen. And so the market walked to that edge of the cliff. And on Friday, there was a huge reversal day, getting it back above the 50-day moving average and reversing it off of the danger zone. And so the market is at least back to its neutral state. So what I want to highlight is that we've now are trading right back in a trade range that literally has been dominating the price action since October. And so the question now is, do the bulls have enough gas in the tank to punch a 52-week high, or are we still in a big topping formation and a market downturn is inevitable? Well, look, we've got retail sales that came out. We have tomorrow the jobs numbers that were delayed because of government shutdowns. And so there's some data points that could potentially be market movers developing. But let's size up what has actually happened to the market under the hood. And so the name of the game remains sector rotation. What I want to highlight here, so notice the S&P trading near 52-week highs. But I want to highlight that when you look at the S&P 500 equal weight index, which is removing all of the market capitalization weighting of those Mag 7s and giving an equal weight to each one of the components in the index, all 500 companies, what you can observe is the S&P 500 has been rocking and rolling to the upside on an equal weight basis. This is demonstrating the sector rotation. Now, where has the weakness been? The weakness is definitively in the NASDAQ. And so here, when I pull up a chart here of the NASDAQ, this is the QQQs. What you can observe here is that we had a legitimate breakdown, and the rally in the NASDAQ has just approached the 50-day moving average, has just approached a 50% retracement of the sell-off. Point is, the weakness is very much in the NASDAQ. Of that, the Mag 7s, which is the from a market capitalization, the 7 companies that make up 1/3 of the S&P 500 and 2/3 of the NASDAQ, look how weak this rally has been. Almost no reaction off the lows. Then take the software index, which is the Microsofts and Oracles of the world, and you can see that we've had this this nasty, 30 plus 33%, 1/3 of the index, 33% drop in the software stocks in this devastating crash. And look how weak the bounce has been, at least so far. So what can we take away? Well, you can see the Russell, the small caps, bouncing off that 50-day, turning higher, that equal weight index doing well. Again, sector rotation. What we're seeing is that there's, at an institutional level, a degrossing of the exposure to the Mag 7s, and that money is being put to work in the other sectors in the markets. Then what are the sectors that are getting big flows? Well, XLP, which is the consumer staples, look at the huge rally that the consumer staple names have had, right? Big rebounds. They were in a nasty bear decline and weakness for the last 6 months, and suddenly they're ripping. Take the XLE, the energy sector. Look at the rip that's happening there. What we're seeing is that the underpinning market is taking flows in a lot of those things that have been neglected for the previous 6 months. Now, when we look at it from a market breadth perspective, what you can see here is we're sitting around 67%, but it's still relatively healthy. We have not seen breadth deterioration. Why? Well, the sector rotation. It's going from a small basket of stocks that have been doing very well to now a whole basket of stocks, and we're seeing that elevating the levels of the market. So we're in a situation where that sector rotation is happening, and at least for now, the S&P 500 is out of the danger zone on here. So the bigger puzzle to solve here is, will the S&P 500 manage to make 52-week highs, and can it make a progress on the upside? The key here, there is a measured move on the upside of the S&P 500 all the way up to 7,500. And I asked the question, what is it that would have to happen in these internals in order for us to break the 52-week highs and give a stab on the upside like that? Well, really, the market can't make that kind of a progressive move without us seeing a substantial bounce in the Mag 7s. Why? They're so oversold. Like, for instance, take Microsoft here. Let me just you pick on this Mag 7. You can observe here how incredibly oversold Microsoft is. If Microsoft put in a multi-week or a 1 month rally that got it back up to the 50-day moving average, back up to, let's say, a 50% retracement of its prior decline, let's say approaching 460, 470 on the upside, you would need these Mag 7s going from this very oversold state and rebounding. That could give enough of a boost to the broader market cap weighted indices to have that kind of an impulse. Is that going to be the theme for February going into March? That is the puzzle we're trying to solve here. The market is not out of danger if the market can't beat those 52-week highs. This is a very heavy price action on this, and we really need to see the bulls break 52-week highs and take command of this market for the trend for the next 6-7 weeks to be a bullish one. Can they do it? Well, it's certainly a possibility, and one that I'm not going to push back on. But I will become once again very concerned about these markets if we're not breaking 52-week highs. If I'm not coming on here and talking about this 1 or 2 weeks from now, and the S&P is struggling along those previous highs, it's going to ultimately lead to another stab at a drop in the market and begin another downside window for a potential breakdown. Right now, let's give the bulls the benefit of the doubt. Let's at least see whether or not they can keep the market out of the danger zone and push it to a 52-week high. This is 100% the short-term target on there. The other thing I wanted to briefly touch on is the breakdown in the dollar. We've been very clear in previous webinars or previous ones of these YouTube streams that basically this 97.5 to 98 level, the fib zone, and where that 50-day moving average is, was going to be a big tell for the dollar, and that if the US dollar failed to break above these levels, then the prevailing breakdown is the dominant trend, and the bear market is still the path of least resistance. This failure in rollover in the dollar is literally leaving the downside window on the dollar open. And so we're going to be watching whether or not the previous lows can act as support. But we could have a breakdown down to 95 on the dollar index, which could shoot the euro higher, can put in a bottom in the yen, all sorts of different things. Lots of opportunities there on the dollar. Keep your eye on that. The fact that it failed at that key level means that prevailing downtrend in the dollar is the path of least resistance right now. All right, listen, everyone. This is where we're going to wrap up the YouTube live stream. Listen, if any of you want to continue this conversation and see how we take these ideas and turn them into real trades, That's what I do with my members at Big Picture Trading. If any of you want to have a look behind the curtain and try a 14-day free trial to see what we do, you can click on the link or just simply go to bigpicturetrading.com and click on that 14-day free trial button and have a peek. So I'm just going to quickly show the member section here. When you join, what you can observe here is that there's on the right-hand side, this square with this big orange button says join now. This is where I'm going to be spending the next hour with my members talking about all sorts of trades and setups and everything in there. Have a look at what we're doing in there. Otherwise, I'll do these every single day. If you are not going to join me for a free trial, we'll see you tomorrow. And so thanks, everyone, and have a great day.